Well, first off, hello everybody. I'm Kyle Ellicott with TechZulu. I'm here with Howard Orloff. And tell us a little bit about yourself and what you're up to these days.
Sure, absolutely. And hey, I really appreciate you guys having me. Basically, what we're doing, I got involved with crowdfunding pretty early on. Kind of caught wind of it and put together a little review site, crowdfunding website reviews. You know, not the catchiest of titles, but probably pretty good from Google's standpoint. And started kind of getting involved with crowdsourcing.org and a couple of the professional organizations that were coming together in the early stages when Kickstarter was really starting to get some headlines. Put together the review site and got contacted by some VC type folks over in New York who had a pretty exciting idea. They had been looking at equity crowdfunding and seeing what they could do as the SEC put together the new rules regarding equity crowdfunding under the Jobs Act, and working together, we kind of came up with what I think is a pretty interesting concept, sort of a hybrid between crowdfunding as we know it, equity crowdfunding under the Jobs Act, and kind of the standard IPO process of today. So basically what we're doing is we've set up a portal, finishing touches on kind of the 2.0, the actual live version, coming up in just under 2 weeks. We should be live and running. And what we're doing is we're using a crowdfunding platform to take companies public. These will be NASDAQ OTC traded companies, and kind of doing it the way it was originally intended, right? So the investment bankers and the underwriters kind of took control of Wall Street, right? And now the underwriters basically are writing a check already to the company. They have the shares pre-sold to their institutional investors and investment bankers, and then in general, these shares are marked up about 23% before they get into the hands of retail investors. If we look at the origin of kind of what Wall Street was supposed to be, it was going to be the public investing their capital into startup companies or companies that need to grow, sort of the way it was originally designed. If we step back about 15 years, there was a company called WIT Capital. They kind of jumped on internet and tech companies going directly to public, DPO they were referred to, and they had a ton of success during a bunch of years ago. They were actually absorbed by Charles Schwab and never heard from again, right? It probably wasn't his best interest for their model to be effective. Along comes kind of, social media, social networking, and kind of an opportunity because of the critical mass created around social media and around crowdfunding and the excitement involved to take companies direct to the public, cutting out underwriters and investment bankers, offering these shares in companies directly to retail investors. And this has nothing to do with the Jobs Act. So this is all legal and legitimate and authorized by the SEC. These are SEC regulated companies that will trade on the NASDAQ, no dividend. Facebook, not the best example of an IPO. Their company traded on NASDAQ. So, it kind of combines crowdfunding and equity crowdfunding with kind of a more the standard practice of today. So issues, for example, fraud, right? It's the biggest deterrent that folks see in equity crowdfunding is because these are private, these are small companies. Everybody's going to be a con artist, right? Well, the companies that we can bring to the public go through the same regulation, the same publicly traded company. So, have that taken care of. Not that the SEC has always done the greatest job, and I have my personal feelings that the crowd is probably a whole lot smarter than the SEC. But that it could put some established individual investors a little more at ease. The other side to that, excuse me, is an exit. If you're in early stages of a Jobs Act created equity crowdfunding offering, there really is no exit strategy. The secondary market hasn't been created yet. So right now, you buy shares in this, whether it's a tech company, a chain of pizzerias, whatever. There's no established exit strategy. Of course, with a publicly traded company, you call your broker, and you have an actual stock certificate, and there already is a secondary market created.
Right.
That in a nutshell. Yeah, that's right, because I get pretty excited and start talking about it, but that's what IPO Village is all about.
Well, that's great. It's exciting to see your passion in something specifically that's becoming so large in our industry right now, and really in tech, as we have some of these companies that are trying to get to that Facebook level or get to that IPO level. So it's really exciting to see how passionate you are about this, and it sounds really exciting what you guys are doing, merging both sides. But how did you get involved with this? Is this are you an investor by nature, or kind of what's your background and how did you get tied into becoming really a part of IPO Village?
Sure. Well, I've definitely, as an individual, as a married guy with some kids, I've certainly invested some money, and was fortunate enough to work for Apple for a half a dozen years, and I was the smartest guy in the world when I sold a bunch at $2.25 a share, but I can't really complain. Buying shares on an employee purchase program, thank goodness we did okay. I probably could have held off a little longer, but that's another story. So, investing is obviously something I've always been interested in. But really, I was contacted by the folks at First Line Capital.
Okay.
And they're VC guys, and really First Line is actually an investment banking consulting group. They bring small companies public or advise them on doing so. They got wind of kind of the Jobs Act and equity crowdfunding. Did a couple of Google searches. My site showed up. I guess they did a little research on kind of who I was and kind of getting my name out there. Right? No designations after my name. Not an attorney. Not a financial planner by any stretch, right? But just, because I was involved in a lot of early conversations about crowdfunding, they reached out and looked to see what kind of opportunities there may be. And they kind of had this idea. They had been mesmerized years ago by Wick Capital and kind of what they did. A little background, that was an attorney on Wall Street who wanted to retire and open a brewery. He knew investment law as well as any attorney on Wall Street would, and devised a way to raise capital for his brewery without these underwriters and investment bankers. So started to do that, and all these tech companies got interested and had a ton of success bringing folks public in these DPOs, these direct public offerings.
Right.
Like I said, they got, $360 million later, you never really heard them again. The buyout price, I'm now, but this opportunity for us to invest directly in tech companies, or any type of companies, just kind of pushed by the wayside. It corresponded nicely with the bursting of the tech bubble, and they kind of went away. So these folks at First Line, they had been, for the last dozen or so years, looking for a way to bring companies that they'd invested in as VCs or companies they were representing to kind of cut out this 23% markup, this, the hundreds and hundreds of thousands of dollars that it costs to go public. As they started crowdfunding and kind of the critical mass that was building, and then the Jobs Act, more publicity, they started to have this idea about going direct through a crowdfunding portal.
Right.
And then we started to speak and started to talk about what makes crowdfunding platforms as well as private successful. And then I was granted the title of the mayor of IPO Village.
Congratulations. I feel like it's good. It's a perfect segue for it being election day. You were elected mayor of IPO Village.
That's right. It was my wife was pretty excited when she saw the press release. I got to tell you,
as she should be, and very proud. Well, Howard, you've told us a lot about this, and just kind of curious on your opinion. We have crowdfunding, which allows certain individuals in the public and the free market to invest into companies, with or without an exit strategy. But what do you think crowdfunding is doing for investors? You know, your typical VCs or your angel investors. Do you feel that it's, you know, increasing the amount of deals that they would take? Or, you know, is it kind of hurting that market of companies that have opportunities instead of going towards investment, go towards crowdfunding?
Sure. I'll tell you, you know, the initial reaction and the initial articles written were equity crowdfunding. It's going to destroy the VCs. It's it's the worst thing that could ever happen. I could see them, you know, calling up their lobbyists and saying we've got to squash this thing. You know, but the reality is you know, a program like IPO Village is actually ideal for a VC, and the reason being, this gives them a fantastic exit strategy. You know, it's really the kind. So the folks that here's what I believe. And this is just my opinion. I think that the Jobs Act and equity crowdfunding isn't necessarily made for Silicon Valley. I think that the VCs are always going to be out there. They're going to be looking for those two kids in the garage that are going to change the world, and they're going to find them, and they're going to fund them, and they're going to do very well. Equity crowdfunding, in my opinion, is actually going to be incredible on a localized basis. So you have a couple of pizzerias, right? As silly as it sounds, and you have an established clientele in your 4 or 5 pizza places, right? And the owner can't really pull any cash out of this business. Well, I suppose he can pull some cash out, but that's just, but he wants some new ovens, right? He wants to take in yogurt, whatever the case may be.
Right.
What an incredible way for the local community to kind of support this business and this business's growth, right? I don't really see where, you know, the VC community is going to be harmed by equity crowdfunding. I think there's a solid division. I think where IPO Village comes in, I think is actually where folks initially were saying the VCs are going to hate you guys. I think actually it's probably a great opportunity for them to exit some investments and save a ton of money on finally bringing these companies public, which is their exit, right? And that's how they make it.
Which makes sense. I mean, you know, in crowdfunding, it's great for some individuals, but like you said, for investors who are looking for that actual exit in a given time period for a given, you know, percentage, this strategy makes sense. They, you know, have an exit, there's a possibility, and then there's the direct IPO. So, you know, speaking of an exit and kind of the secondary market that's going on, do you think that we'll start to see more of an exit platform built on crowdfunding, you know, with players like yourself in the game of, you know, IPO Village?
Well, there's no question. You know, it's in the very early stages, right? So where we were supposed to be in the first week of 2013, you know, we're supposed to have a Jobs Act rules in place and ready to kick off. The latest talk, and this is, you know, kind of just in speaking to folks in the business, they're saying we'll be lucky if the SEC finally puts things together by the third quarter of 2013, right? So, you know, anyone involved in true equity crowdfunding and the Jobs Act is at the mercy of how fast the government can move. I mean, they're already talking that Hurricane Sandy is a 30-day delay on anything, right? So what a great way to be not bashed politically, but to be able to kind of push off equity crowdfunding, and they haven't really been moving very fast on.
Right.
So it's like a perfect storm, right? They now don't have to do anything, and they've already stated, and they've stated it's not just regarding crowdfunding, but really on almost anything that you filed with the SEC, it's already up to a 30-day delay based on their 30-day periods that you've already been pushed back upon. So. Secondary markets obviously won't come into any play until, you know, the Jobs Act is actually, you know, rules are written and that gets started. So if we're looking at the second or third quarter of 2013, now there are some small players and folks that have reached out. California Stock Exchange is a bunch of folks getting together and a few other companies. So it's something that's definitely being looked at by some folks a whole lot smarter than myself. And it's going to happen because it's logical for there to be a secondary market. But it's probably a solid year off from there being any activity. And I don't mean activity as far as developing an exchange. I mean, you'd have to first equity crowdfund some companies prior to there being any secondary activity.
Right. So do you guys see yourselves ever combining with some of the new players in the game or some of the old players in the game in traditional crowdfunding, like, WeFunder, Grow VC or Kickstarter, some of these, websites out there that are doing a great job of crowdfunding in general? Do you ever see your guys' selves using them as a platform to kind of bring companies into yours, into IPO Village and then make that exit?
Sure. Well, it's kind of interesting. Some of those folks think we're fighting against them. They just don't get it, right? It's really a different market for really a different sized company. Looking to bring companies public, $10 to $30 million valuation, raising the $1 million in equity crowdfunding. Now there are, kind of the pickaxe players, a lot of supporting cast that we're definitely building relationships with. EquityNet, and what they do is they do a lot of consulting work for folks that would like to equity crowdfund their businesses. Now, there's a point where it would really be beneficial for the company to go public versus raising money. So, we're certainly talking to a lot of folks. I made a lot of relationships over the course of this incredibly fast-moving, 6 months, right? It seems like for 6 years, but a whole lot of phone calls and a whole lot of very cool people driving this business. So nothing firm on paper, but the portal, the IPO Village portal is open right now. We're just our first offering will be a portfolio company of First Line Capital.
Okay.
Really, any company that has gone through the regulating process with NASDAQ, or with the SEC, I should say, we're more than happy to work with those folks. And the actual financial actually takes place on their company website. So IPO Village is just a portal. So it'll take potential investors, and after they've done their due diligence, and we are huge on due diligence, these aren't small OTC companies. Once the due diligence is done, and that information will be provided on our site, on the IPO Village site, the actual financial transaction will actually take place through the company's website. No different than if you went to Home Depot's website today, you can actually buy stock in Home Depot without calling or logging on to E-Trade. You can buy that direct from company treasury stock, and that's something available, but it's really in nobody's best interest.
Right.
Right? Because there's no commish.
Right.
No commish.
So, Howard, you mentioned too that you guys in 2 weeks are going to have, a release, kind of a new platform coming out. Some of the companies that are going to be highlighted, if possible, I don't know if you're allowed to talk about them, but are they more in the tech region, the health region, education, sciences, medical? Like, what are some of these first companies that you guys are working with that you can talk about?
Sure. I can't give the company name. Right?
Yes. Yeah. Sorry. No company names, but what kind of industries are you working in?
So we have it's a medical cosmetic device maker. It's FDA approved technology. They have over 100 established locations in dermatologist offices. A very established company with technology that was originally created in Israel. It's a worldwide company, and they will be our first direct to public offering through IPO Village. Very basic details are already listed on our website. The financials, as soon as the SEC just says go, right, turn it on, and the company's financials become, public to potential investors. If folks jump on IPO Village and sign up and kind of get in line as potential investors, and they're certainly not locked in, right? They're not writing a check.
Right.
But at that point, by expressing interest, they'll actually receive an email with the company name. And they can start to do their due diligence. But as a company representative, I can't publicize the name of the company.
Very.
One of these, it's something we joke about, right? So there's these great rules that the SEC has, and they were put in place to protect investors like before telephone, right? So, you put something out on the internet, right? And you and I and everybody has equal access to this information, but these quiet period rules were established so that, the kind of 1%ers, almost cliche already, can't get together in a room, sip and tea, and talk about the next great deal. These are rules that are so archaic, it's silly, but nonetheless, after the IRS, the only other boys I don't fool around with are the SEC guys. So,
smart, very, very smart moves. Well, Howard, before we sign off here, what's next in the works that you guys we haven't already talked about? I mean, here we are on election day. We're coming to the close of 2012, 2013. Hopefully everything will get moving, as planned and not delayed too much longer. But what's next for yourself and IPO Village?
Well, really right now, so we have 2 signed deals. These are companies that are both already in the approval process with the SEC. So we have the cosmetic device maker. We have an Israeli technology company, a name that a lot of folks will know once that goes through, and working with a couple of other folks that are within the first line capital portfolio. What we're really looking for are folks that kind of get wind of what we're doing, and I understand hesitation. Once this first deal's funded, this is going to get real fun. Right. I know that for sure. So at this point, we're really focused on these first couple of deals. We're in talks with a couple of other folks that actually have contacted us since we've kind of got the name out there. But really, we're looking to open this up to folks beyond first line and really kind of change the landscape and give you and I, well, I don't know your financials, but I don't have $10 million in a Morgan Stanley account where I could say, hey, I want a piece of this action on the new IPO. That's just not going to happen for average folks. And this gives people the opportunity where it's really a first come, first serve opportunity. And obviously you can always say no, right? But you can do your due diligence and be guaranteed a piece of a company or an opportunity to invest in a company without kind of the connections that have been needed over the last 7,500 years. So, really looking to kind of just change the way business is done. And that's, what makes this technology, excitement around crowdfunding just so damn cool.
Well, Howard, I know I can speak for myself, and I'm sure the viewers as well. We're all very much excited and looking forward to this just as much as you are as well. And again, Howard, thank you very much for taking time to speak with us today. And everybody, Howard Orloff here, the mayor and managing director of IPO Village. Make sure you check out IPO Village at ipovillage.com. Howard, again, thank you very much. And we'll also like to say thank you to IOLA here in Hollywood for letting us use some space to do this wonderful interview. So, Howard, have a great and wonderful day, and we look forward to hearing what's next with IPO Village.
Thank you very much, Kyle. It's been a pleasure talking to you.
You too. Take care.
Bye-bye.